Welcome to Denome and welcome to this crypto update. This week's update is massive because we have new executive orders which will basically bring liquidity to crypto, will pump crypto prices, and there is a change in the Federal Reserve. So most likely we will see quantitative easing coming to the markets, which means that more liquidity is entering the markets as well. And then it seems like the conflict between Russia and Ukraine is coming to a close as well. So there will be a meeting between Putin and Trump in the coming days. So I will talk about that also in this video. And then we will look at the fundamentals and then we will look at the technical analysis at the end. But just to give you a quick glance of the big view, 2 weeks ago, I shared this video that this is their plan, that first we have a pullback to the downside here, and then we will pump to the upside. And that plan has basically been playing out in the last couple of weeks perfectly. And now it seems like we are heading for that move to the upside. However, there is another view that you could also have, which is that this is actually a falling wedge, and we will break down from here, and I will give you my price targets for that also at the end of the day, at the end of the video. But now let's actually talk about the big news, the big changes coming to crypto. And the first major one is that President Trump has signed an executive order which allows cryptocurrencies in 401k retirement plans today, which means that today retirement funds can already go out and acquire Bitcoin, acquire Ethereum, and buy other crypto assets in their portfolios, whichever they want. So this is bringing new liquidity to crypto immediately. Now, I don't know how many of these retirement plans actually do that, but since many people in the United States are in control over their 401ks directly, this means that some people may choose to do so. And this is just one of their puzzle pieces, how they eventually want to dump on the retail investors. Because in my opinion, the big money has done accumulating, and next phases is to dump it on the retail investors. And this is basically in accordance to that idea. So that is the first big thing. The next big thing is coming from the Federal Reserve. So JD Vance forwarded this post here from Donald Trump, which says that it is my great honor to announce that I have chosen Dr. Stephen Miran, the current chairman of the Council of Economic Advisors, to serve in the just vacated seat on the Federal Reserve Board until January 31st, 2026. Now, why? Basically, this comes from the back of a couple of weeks ago when Donald Trump put a lot of pressure on the Federal Reserve to change their policies to lower interest rates and to basically enter into quantitative easing. And Federal Reserve so far has not done so, but there was one member in the board who resigned basically under that pressure. And now Stephen Miran is entering into that position, and you can see him here. Now, who is Stephen Miran? He is the same exact guy who is in charge of Donald Trump's tariff policies. So I made a lengthy video here explaining all of the reasons why the tariff policies are not very ideal to do in the situation where Donald Trump is currently in. But in that video, I also referenced Stephen Miran's guidebook on how to do the tariff policies. So Stephen Miran is the architect of Donald Trump's tariff policy guidelines. Also, he made something called the Mar-a-Lago Accords. So this is also coming from Stephen Miran. So the Mar-a-Lago Accord is basically the plan to bring manufacturing to United States, and it has multiple ideas. The first objective is to weaken the US dollar, and this is what we have seen this year. So the value of the dollar has gone down in value, and when the value of the dollar goes down, it makes exporting goods from United States to other countries more favorable, because suddenly US goods are more competitive because the dollar is less valuable. So that's what they have done this year. Then also they want to reduce trade deficits, and that is what the tariffs are for. They want to boost manufacturing, to give incentives to US manufacturing. That we haven't seen this year yet. We haven't really seen any tax cuts either on manufacturing either. We have only seen some exemptions for the largest US companies, basically, who bribe Donald Trump. They get these different easings or whatnot. But we haven't seen this yet. Maybe it will come later this year. We will see. But one way to boost manufacturing is to also cut down energy costs, which has happened this year. And I believe Donald Trump wants to cut it even further to the downside. And obviously, when energy is cheaper, then manufacturing becomes cheaper as well. They will also use tariffs as leverage, which we have seen this year as well. We haven't seen debt restructuring, but this is important. This is part of the quantitative easing plan. So a controversial proposal involves converting foreign-held US treasuries into ultra long-term 100-year or zero coupon bonds to reduce short-term refinancing needs and interest costs. I don't know if this plan will will plan out. Who will buy these bonds? I have no idea how they will plan to do this, but this is basically what quantitative easing is. You do these funny schemes where you basically don't have to pay interest on the debt, and then the markets will pump to the upside, and there will be massive inflation as a result. So anyway, I believe this debt restructuring is just part of that. So I don't know the details exactly what's going on here, but they want to leverage US military presence. So you have to buy this, so we will give you security or something like that. And then currency intervention. So trading partners like G7, China, Japan will coordinate to sell dollars in foreign exchange markets to depress its value, so further bring the US dollar price down. Meanwhile, they continue to buy these very, very bad treasury bonds from the United States. I don't know who would buy this, but that is the plan behind all of this. And then security guarantees US will use its military umbrella as leverage as well. And here you can see Stephen Miran is the facilitator here, and then you have Scott Bessent here as well, who is the Treasury Secretary of United States. So that is basically Stephen Miran, and also you have to know that it was Donald Trump who chose him to lead the Council of Economic Advisors in 2024 December. So Stephen Miran is a massive buddy to Donald Trump. So he will do everything in his power to do quantitative easing, to bring interest rates down, and to basically pump the markets and to devalue the dollar, and to bring this bull run basically to its final phases. So from this nomination, we know what the plan is, and the plan is to pump the markets to the upside, suck in the retail investors, and then call it a day afterwards. Then on the geopolitical side, I do have to mention this, that Trump and Putin are about to meet in the coming days. This information supposedly comes from Kremlin, according to BBC. So what happened is on Wednesday, Steve Witkoff went to Moscow to meet with Putin, and they talked for 3 hours together. And after that meeting, Putin agreed to meet with Donald Trump in the coming days. So what will happen next is most likely the bombing of Ukraine will calm down for a while to make sure that these negotiations don't go sideways. And then in the negotiations, there will be Trump, there will be Putin, and there may be even Zelensky joining in. So Zelensky has indicated support for this idea that he would basically become a part of these talks as well. And these talks will be in United Arab Emirates. So from my perspective, this seems like Trump is willing to bend to Putin's demands. There might be some concessions coming from Putin, but it seems to me that Russia is winning this war. Now, depending on which news article you read. This could also go sideways in the way that this is basically the last Hail Mary attempt to get Putin to agree on a ceasefire, the unconditional ceasefire that the Europeans are always talking about and the neocons in the United States. And if Putin does not agree to a ceasefire in this last Hail Mary attempt to basically bring a ceasefire and then for basically Russia to concede to Trump's demands, then there might be a massive escalation afterwards. And I hope that is not the case, because this year something called a START treaty will end, which is the treaty that prohibits both Russia and the United States from developing and creating more nuclear weapons. But that treaty has come to an end, and it doesn't seem as of now that they want to really continue it from the United States side. So I hope that we will not get into an era of nuclear arms development, and that cycle could end up very badly for the world. What I hope is that this will actually be a peace talk and that they will find a common ground for whatever will come out of this. But one thing that as crypto investors we can get out of this is that most likely there will not be these 100% tariffs for China and India and other countries. I think that has now been scrapped. And because Putin agreed to this meeting, Trump will most likely not issue those. So that fight is basically behind us for now, at least temporarily. So let's see what will come from this. I'm optimistic that they will find peace here, but it remains to be seen. It could go either way, to be honest. Then one more thing, or another clue why I think this is coming to a close, is that on July 28th, the Benjamin Netanyahu actually had a conversation with Putin over a phone. So everybody knows that Benjamin Netanyahu is a good buddy to Donald Trump. Trump does everything that Benjamin Netanyahu wants. And in this call coming from the Kremlin, Russian side has expressed willingness to facilitate in every possible way the search for negotiated solutions to the Iran's nuclear issue. So this is the idea here, that if Israel has been able to cut a deal with Russia, then it's likely that Trump will cut a deal with Russia as well, because Trump does whatever Benjamin Netanyahu wants at this point. So that is basically my clue why I believe that it seems like there might be peace coming for Ukraine and Russia. But that remains to be seen. But now let's get back to crypto. So the SEC case against Ripple is now completely done and dusted. It has been thrown out the window, so that is nice. Then we have another news coming from the United States regarding crypto regulation, and this time we're talking about liquid staking. So liquid staked tokens are not securities according to the SEC. So here is the best screenshot that I was able to find directly from the SEC website. So staking receipt tokens issued to a depositor does not constitute any of the financial instruments specifically enumerated in the definition of security. So basically, liquid stake tokens do not constitute as securities. That is directly from the SEC, and that means that there will be more utility for Ethereum, there will be more utility for liquid staked Ethereum tokens. There's better collateral as well, more yield, more winning. And now what we have seen from Lido Finance as an example is that they have a new partnership right after this news from GK8. So GK8 is now a new custody partner for Lido Finance's liquid staked Ethereum. So this means that institutions can have liquid staked Ethereum, earn yield on it, and then do leverage trading on top of that collateral. So this is just a better form of collateral where you earn yield while you do trading at the same time. So it's absolutely beautiful, and I hope it will come to the retail investors as well down the line. But at least as of now, the institutions are piling on top of this, and this is why I'm so bullish on Lido Finance, because it is becoming a more integral part of what institutions do with crypto. And also, just as a reminder why I'm so bullish on Lido, is when we take a look at their total value locked. So they have $35 billion worth of Ethereum in their vaults as liquid staked Ethereum, and they only collect a 10% fee for that service, and you don't have to have computers running the staking service. You don't have to have the 32 Ethereum required to run a staking node. You don't have to worry about slashing fees, none of that. Just pay a 10% fee, and then you have a liquid staked Ethereum token. And here you can see that their total value locked is $35 billion, but the market cap of for Lido Finance is only $1 billion as of now. So the ratio between total value locked and the market cap is 35 to 1, which is that's a massive difference. So even if Lido Finance goes 10x from the current price point, it would only be a $10 billion market cap, and the total value locked probably will be $70 billion by that time or higher. So in my opinion, Lido Finance could easily do a 10x in this cycle. That's why, in my opinion, this is probably the best crypto asset to have for this cycle from my perspective. But I could be wrong here. I've been wrong many times, but that's just my take on Lido Finance. Also, just talking about altcoins for a quick bit, Chainlink has announced a Chainlink reserve. So on August 7th, 2025, they created this Chainlink reserve, which means that they will accumulate link tokens from the revenue from on-chain services as well as off-chain services, and they will pool it in, convert it into Chainlink tokens, and then deposit into this Chainlink reserve. And this basically brings more value to token holders in the long run. And as it says here, they do not expect any withdrawals from the reserve for multiple years. So they bring more link into the reserve, but they don't sell any for at least a couple of years. So that is a good news for link holders or people who are bullish on the Chainlink token. Very, very good. And as of making this blog post on August 7th, there was already $1 million worth of link tokens in the early stage link reserve, and it is expected to gradually grow in the coming months, obviously. So this is very nice to see. And then on Lido Finance, I'm already seeing on their DAO pages that they also want to have a dynamic buyback program for LDO. So the pressure is mounting for Lido DAO for LDO holders to basically gain a little bit of the protocol revenue one way or the other. So that is also good to see that when they do implement this, then I also believe that the price will have a nice bump to the upside as well. I don't know if they will ever implement this or not, but at least the speculation will grow that they will implement it as the pressure comes on them. Next, we do have another company joining in the Bitcoin strategic reserve strategies, and that is called Parataxis Holdings. So they have now committed to a $640 million Bitcoin purchase for their treasury reserves, and this they haven't done yet. So this is future demand for Bitcoin. Very nice to see. And then we saw a couple of smaller companies acquiring Bitcoin this week. Vault Capital has pulled 48 Bitcoin worth £4 million. And then from European Union, Capital B has acquired 62 Bitcoin worth 6.2 million euros as well. I did not see other acquisitions except from I think Sharplink made a purchase this week, but I don't have the tweet as of now. Sorry for that. But all in all, those were the bullish news for this week. And then you have to keep in mind that the big bombs haven't been opened yet for crypto. And the two big bombs coming to crypto is Trump Media back in June 6th announced that they will go ahead and buy $12 billion worth of Bitcoin and cryptos for their strategic reserve. So previously they made a $2.4 billion fundraising deal and they bought Bitcoin with that capital. And in June, they announced that they will do the same thing, but instead of $2.4 billion, they will do a round of $12 billion. And as of now, they haven't closed this deal yet. When they do close the deal, I think they will make an announcement and then they will start buying the Bitcoin into their treasury. I'm not exactly 100% sure if they will do it uh, uh, side by side, that they are already buying the Bitcoin from the markets. It could be the case as well. I don't exactly know the detail, but all in all, they are still probably buying Bitcoin, or they will buy Bitcoin in the future. But when this is announced, this is an incentive for Trump to pump the crypto prices to the upside. He and his family are massively into crypto as of now with the World Liberty Financial and these Bitcoin treasury strategies as well. And then the biggest bomb out of all is also not hit the markets yet, which is the Bitcoin strategic reserve of the United States. So they have the strategic reserve already, and they have played with a few ideas how they can go ahead and buy crypto into this strategic reserve. But as of now, they haven't committed to any plan yet. Once they do that, once they start buying Bitcoin and crypto into this strategic reserve, that is, in my opinion, when the retail investors finally flock into the markets. So we currently have about 1 month left until the World Liberty Financial, which is Trump family's DeFi project, once the token launches. So maybe if we see that, let's say 3 weeks from now, that they will start buying Bitcoin and crypto into the strategic reserve one way or the other, then the retail investors flock in, and then we will have like a top of the market. So we have about a month until the World Liberty Financial token is released. So I hope that we will get a nice bull run for that release, and then basically that will be a local top, and then I will see if this market will continue after that for maybe even a one final push to the upside. But basically, in my opinion, right now, all of these pieces are in place, but the retail investors are not here yet. And that is the next phase of this bull market, in my opinion. Now, there is one annoying piece of news, or it's not exactly news, but I will talk about this and I will make a separate video. But it is the European Union and their DAC 8 regulation, because this will hit the markets on 1st of January 2026. And it will basically make privacy impossible for citizens of European Union who deal with crypto. So I will talk about this. It's very annoying, and it will probably suck out some liquidity from the markets as well. So it's basically a taxation, international taxation scheme where citizens of European Union countries their tax information is automatically sent from the exchanges, from DeFi platforms to their home countries in European Union. So I'll talk about this in a separate video because it deserves a completely separate explanation. But this is coming at the end of the year, so I think many people will want to take their profits off, and then when this kicks in January 1st, 2026, people in European Union many people will exit crypto completely because they may not have an off-ramp afterwards anymore. So anyway, I will make a separate video about this. Now, going into the fundamental analysis, some good news here is when we take a look at the supply of Bitcoin on exchange reserves, we are seeing in the last couple of days an outflow from exchanges into private wallets, and that is a good thing. We want people to accumulate Bitcoin out of exchanges into their wallets. That means that there is consistent demand for Bitcoin. But unfortunately, since June, we have seen a small trend to the upside here. So this that is going down in the short term. I hope it continues to go that way. Then another good news is when we take a look at the market cap of stablecoins, we have seen about a $1 billion worth of stablecoins minted in this week. It's slower than we saw earlier when we saw about $2 billion a week, but it is still a continuation of this uptrend, and I hope it continues to grow to the upside as well. Then finally, I do want to mention this which is when we take a look at wallets that have 100 to 1000 Bitcoin inside them, this is basically mostly your ETF wallets, as well as companies who have these Bitcoin treasury strategies. They hold their Bitcoin in wallets smaller than 1000 Bitcoin. They have started to grow once again. So we saw this blip to the downside, but now it has grown once again. So this is nice to see. We want to see the yellow line go up, because if this continues to go down, they have basically been the only wallet who has continuously bought Bitcoin throughout all of this time. If they go bearish, then the markets will probably collapse as a result. So I hope they will continue to go up as well. Then on the ETF side, we saw an inflow of almost $300 million into Bitcoin ETF yesterday. So that comes after we saw this massive $800 million worth of sales last week. So last week there was over $1 billion worth of sales of, sorry, not only last week, but this week as well. The sales continued, but now we're seeing an inflow once again. So that is nice to see. And basically the same is true in Ethereum side. So an inflow of $222 million into Ethereum ETFs. So very nice to see as well. So ETFs are back in buy mode as of now. Then on the liquidation heat map, most of the liquidity is now above $120,000 all the way up to $123,000. So it's likely that the Bitcoin price will go back into this area here, and in $123,000 there might be a pullback from there afterwards. But if we have a breakout from this current structure, I will show that soon. It's likely we go to 123k, we have a retest, and then we continue to upside to that 130k mark. That seems to be the case, but it could go straight up to 130k as well. But basically, all I'm saying is that the biggest liquidation zone is now above us. There is another zone here, basically all the way down to $105,000, $103,000. So this is as well, but it's not as big as the one above us. So it's likely that Bitcoin will push up first from here. But we get a little bit different story. It's a little bit annoying when the stories conflict each other, but I will still report this anyway. So when we take a look at the order book deaths on the spot markets, we're seeing massive selling as of now on the limit order side. So there's a negative delta of $200 million more limit sell orders than limit buy orders within a 3% move of the current price point. So this is not obviously what we want to see, but sometimes we do see these massive negative deltas. They give us a small pullback, and then we continue to push higher because the markets don't care if you want to sell your Bitcoin if there's enough buyers who want to buy. So all I'm saying is that this is there. It doesn't mean that Bitcoin will go down, but unfortunately, this is not more bullish. I would like to see it more bullish from these spot markets. The futures markets are currently neutral, so there's same amounts of selling and buying on the limit order side of things as of now. Now, let's hop over to the charts here, and I will show you the bullish and the bearish scenario. So obviously, the bullish scenario, in my opinion, in the short term is this. Because of the spot order book death being so negative, we could see a like a breakdown of this short-term bullish trend that we have been on here. So this line could break down here. Maybe we go, well, not really. If we break there, that would be more bullish because we have this trend line here. So we try to establish ourselves above the trend line here, but then Bitcoin price broke below it once again. Now, as you can see, as of making this video, it's trying to climb back above the trend line, but it is as of now failing to do so. So now, because it failed this attempt to break to the upside from here, it's likely that it will break down. And from here, what I expect is that it will go somewhere here, and then we will break upwards from here. And then the next stop, like I showed you guys in the liquidation heat map, is $123,000. So we go there, and that will be like a short squeeze. And here we might see another pullback, and then we go and hit 130k. And from 130k, that will come basically at the end of the month. From here, I do expect we see another major pullback to the downside. We could even break this long-term trend line from there, unfortunately. But I'm not ready to call that yet. But this is basically my plan: 130k, take profits off there what I can, and then reevaluate the situation, because I believe that this bull market can go all the way up to 155k as well. That would be my next stop after 130k. But 130k, in my opinion, looks very likely as of now, and this is basically the way to get there. But all in all, that is my bullish case. And then for the bearish case, we had this kind of like an inverse head and shoulders situation here. This was the retest, and now we would go to the upside. Now, there's another way to draw this, which is a rising wedge. And if you think this is a rising wedge, these usually break to the downside. And if this breaks to the downside, this is what I think will happen. So we have this trend line here with this low, this consolidation area, and these highs here as well. So it's likely that Bitcoin would drop to this price level, $105,000. There's a CME gap, I believe, somewhere here as well. From here, let me draw this line as well, because it is important. Bitcoin would go up as well. Then we come to a decision if we go hit that 130k, or if we actually break to 91k. And the reason why I'm calling 91k as a bearish scenario is because we have an open CME gap here, which means that a lot of institutional liquidity wants to buy at that area. And also because we would basically complete this we would complete this head and shoulders pattern here, the left shoulder, the head, and then the right shoulder, and then we would go down. Now it could be a horizontal head and shoulders as well, so then the price could go to 74k, but I cannot currently believe it. We would need some kind of a black swan event to reach 74k at these fundamentals. So as of now, 91k could be a possibility, but like I showed you earlier, in my opinion, this is the more likely scenario, that we go to 130k in maybe even this month, and from there I think that's going to be a local top. We go lower from there, and then we might ride higher afterwards. But 130k, I'm going to take a lot of profits out of there, and I believe altcoins will have a nice bull run when Bitcoin reaches that point. So all in all, that is my short-term or medium-term price analysis for Bitcoin. Now, what we really need to do is, if you want to play it safe and you don't want to risk your capital, you want to wait out for a breakout of Bitcoin out of basically above $118,000. If Bitcoin is able to break $118,000, then it's likely that it will boost to 123k as well. So if you want to play it safe, you want to basically buy this breakout here. So that's basically my idea for Bitcoin in the short and medium term. Anyway, that's basically all I had for this video. Now, if you think trading is too hard, or you want to have an easier approach to trading, you may want to have a trading bot which takes out the emotions out of trading, as well as you have massive backtesting tools if you use something called 3commas. 3commas, in my opinion, is one of the best bot trading platforms, and you can have one trading bot for free to get started as well. So watch my videos on 3commas if you want to get started with bot trading, or if you want to diversify your trading with bots and your own trading. So watch these videos here if you are interested in that. Anyway, that's it for this video. Hope you liked it. Consider subscribing to my channel, and I will see you guys on the next video. Thank you and bye bye.